Hello again and welcome. This is Robert Schein, Managing Director and Partner of Blanke, Schein Wealth Management. Today is May 11th of 2021. We're going to talk about long-term trends, what we're noticing here at Blanke, Schein Wealth Management, our investment committee, what we're watching for our clients, so you should be too. So thanks for watching and let's get right to it. Now, what to watch? Now, long-term trends are important. We pay attention to them at Blanke, Schein Wealth Management, and it's important because it also indicates sort of the direction of a certain sector, market, or even sort of facet of what's out there. So as an example, we're paying attention to the US dollar, as well as commodities and the relationship those two have together, as well as value versus growth. Let's start there, if you will. For the last decade, if you look at it, growth or growth companies have outperformed value just about every year in the last 10 years. And so you see that going back into multiple decades where value, so think of a large company that pays its dividends. That's a dividend paying company versus a growth company that retains its dividends or excess free cash flow and builds it and basically reinvests it back into its own sort of CapEx balance sheet because it could grow faster by just reinvesting and retaining. So those are all the big tech companies. Those are growth companies. And they have done extremely well, especially the last 12 months. But the last decade, for sure, growth has outperformed value by a performance standard. If you look at history, as we discussed, value has its time in the sun as well. So there is sort of a changing of the guard sometimes. And right now we're seeing year to date, value is doing quite well. So the banks and some insurance and some of the energies are the top performing in the value sector. And that's what's really driving all of the value over growth. And the big tech right now is obviously in the last 9 out of 10 trading days just recently, but even year to date, sort of flat, if you will. But again, growth took a huge run up last year. So to have sort of a sideways consolidation and to see sort of how it plays out on a go forward basis, I wouldn't count growth out just yet, but it's also intriguing to see sort of the shift of rebalancing on Wall Street to value companies. Now, why would this be? Well, value, as an example, as we talked about, the banks and insurance companies will grow their earnings just by the increase in interest rates, rise of interest rates, or inflation that's hitting in. And that's ultimately hitting corporate earnings, if you will, as well as the US dollar. So the dollar is down. Let's jump to the dollar right now. The dollar is down on several different reasons. One, the probability of rise in corporate earnings, right? The Biden tax plan has proposed an increase in corporate tax rates, as well as an increase in corporate capital gains rates. So those two are headwinds for the US dollar, as well as inflation, as well as interest rates rising. We just talked about those. Those are all negative for the US dollar. Therefore, the dollar is going to see some pressure. Now, when the dollar changes, basically from going from bottom to top and top to bottom or peak to trough, those are really, again, 10-year type secular trends. So they don't just happen overnight. And sometimes we get head fakes, like as an example for growth and value. We had a head fake in the 2016 post-election. We thought value was going to take over and growth actually took over from there. So we see head fakes from time to time, and we could see a head fake on the US dollar, but the US dollar is also getting a lot of headwinds as I just described. And now let's go to commodities. Now, commodities will rise when the dollar falls. And we saw lumber prices as well as copper and everything it is to basically go into the consumption of creating anything on an industrial side or even EV, electric vehicle side, or anything you can think of. Those are really commodities based that are all right now supply chain constraint across the globe. Everyone is coming out of COVID. Everyone's opening up, reopening, and all these supply chains are being really strained. And all the commodity prices are really being hit as well to the upside because of the demand right now. So there's a big rush on the commodity prices because of the demand of reopening right now. So we don't know. Federal Reserve doesn't know. They're monitoring the situation closely, whether it's a short-term inflationary sort of spike on commodity prices, and therefore the US dollar should be down maybe this moment in time, or is it a long-term trend? All three of these we have to pay attention to, and we have to think about in a balanced portfolio, as we do here at Blanke Schein Wealth Management. So our clients already have exposure to both growth and value. They have exposure to commodities. They have exposure to the sort of a dollar hedge, if you will, by just the nature of how we invest for our clients on a go-forward basis. But it's the rebalancing and it's the diversification that sort of gets us through when these markets go from a long-term trend and then reverse course one way or another. But what that tells us is there's always an opportunity in the market somewhere, and we're always going to stay on top of it to take advantage of it for our clients. So right now, the US dollar has reversed trend. So it's down, and we're going to see if the dollar will continue to decline. We're seeing commodity prices rise. We're going to see if it's going to persist. And if it does, that's going to be a root cause, obviously inflation as well. And there's a lot of inflationary factors at work in the market today. So we're going to pay attention to that. Again, the Federal Reserve just thinks this is a moment in time, but markets are telling us something different. So we're going to see how this plays out. And then we're going to see if value really continues for the remainder of the year to outpace its growth counterpart. Again, balance, diversification, and rebalancing, and always, when it's time, just give us a call, and we're here to review your existing situation, current situation in life, your goals and feelings, making sure that your investment portfolio is married up to that. But yeah, volatility does persist, and it will continue for the weeks and months ahead, and that's okay. We're positioned for it nicely, and we'll take advantage of it for you at home. So thanks for watching, and we'll take care, and have a great day.